Hey folks, Dan Frio here with today's topic. How much can I afford with what I'm making? So if you guys would, give me a thumbs up if you can hear me. Let me know what the quality is on the video and the sound and everything else. And also let me know where you're coming from. So here's what we're going to talk about today. I've seen several videos out there. It's like, how much can I afford with the income that I have? So in today's video, I want to explain to you guys how to figure this out and what calculators to use. And there's different theories you can use and so forth. So in today's video, we're just going to get over to, what are you comfortable with, but how much can you really afford on the salary that you make? So without further ado, let's get to it. My name is Dan Frio. I do this report. I do a live event every day or every Wednesday. But I do actually post videos twice a day to inform you guys what the heck's going on with everything, especially this stuff right through here that we're seeing. So in today's video, we're going to talk about interest rates, mortgage payments, and how much can you afford? So here's what we're going to talk about. Right now, mortgage rates, well, let's refresh this and see if there's any updates on rates. Rates are, they're stagnant today. So they're back to zero. MBSs were down about 12 earlier, so that was pushing mortgage rates up. But let's get over to here. I basically pulled a bunch of data from my YouTube channel, and the people that I get the most views from are right through here. Okay, so it's LA, New York, Chicago, and Austin. So what I thought I would do is pull up prices in all these areas, what the average price is, what the price appreciation or depreciation have done since 2000, right about COVID, and then what the average income is. And then we're going to figure out, I'm going to show you guys actually live here how to figure out what your debt ratio is and then what mortgage program, if any, you would fit into. So as you guys are coming on board, please let me know where you're coming from. Hey, Puggy from Maple Valley, Washington. Thank you for coming in from Utah. So you can hear me, you can see me, everything's good. Please let me know. So let's get over to this. And if there's not a ton of people on here today, if we get less less than 100 or two, I might just take individual questions from you. We can run some numbers for you. But here's the data that I want to show you guys. And because there's a ton of videos out there saying, oh my God, I can't afford this or whatever. Folks, a lot of people can't afford in LA. Okay, it's the average home is 1.2 million. So before a lot of people start, saying, where did you get all this information? Let me explain it to you. So what I did is I used ChatGPT. And I broke it down, and I did this. I ran it many, many times to get the data as accurate as I could, because some of the data was 2023 and so forth. So this was the final report. What I did is I also asked it, where did you get the data from? And you'll see at the bottom right through here. So I just posted this down in the description section of the YouTube video. Check it out. I'm going to share this screen with you. So what it does is it's going to give you the average median home prices in different areas, what the home has done in appreciation or depreciation since 2020, and then the average income. And so that's what we're going to talk about today. Right through here are key takeaways. LA, the house prices has seen the highest home price gain since 2020, making affordability a challenge. Yes, I agree with that. New York remains expensive, but hasn't surged as much as LA. And then here in Chicago, like I keep telling you guys, our appreciation rate's like 3, 4, 5% a year, and it's a year after year after year after year. There's no big ups and downs in our market. In Austin, we're going to look at that as well, because that's a poster child of the housing crash. Okay, so let's get over to it. Some of the data we're going to use today is right through here. We're going to use a mortgage calculator, and that's in the description down below as well if you want to pop this up and work on some, what your numbers would look like. I'm also going to go over and show you what kind of debt ratios you can qualify for each program. So sorry about how it abbreviated this, but it's going to give you the program. This is conventional, FHA, VA, and USDA. It's also going to give you the front end and back end ratios of your mortgage. And I'll explain that a little bit here in a minute. Then I'm going to show you, when you're looking at houses like on an MLS and things like that, what do you really need to pay attention to that'll help the finance piece of this puzzle and make the numbers as accurate as possible. So let's get to it. So today's rates we're going to use for FHA and VA, we're going to use 6.8 for conventional loans and 6.25 for FHA. So let's get over to what we're looking at. So right through here, if you live in, I'm going to say, for example, let's say I live in Chicago, which I do. It's saying the average home price is $350,000. Now you might agree or disagree, but again, that's why I put all the data down and below there. So if you want to see where I got the data from or where ChatGPT got it from, it's going to give you all the information right through here. Okay, so we go over to here, and Chicago's saying it's a $350,000 is your average home to looking to buy. The home price since basically COVID is up 30%, and the average person makes $75,134. Okay, so let's analyze, could you qualify for this house? So what we're going to do is we're going to go over to a mortgage calculator, and we're going to say, okay, we're buying it for $350,000. Now, if you're a first-time home buyer, or you haven't bought before, or even if you are a multiple home buyer, in most cases, you can get away with 3 to 3.5%. So we're going to work with a conventional loan today, Home Ready or Home Possible, that only requires 3% of a down payment. So if we're looking to buy a $350,000 home and we put 3% down, the rate, let's go back to here where we said the rate's going to be 6.8%. So let's make this 6.8% to match what our numbers are going to be. And that's what it's giving you. So it's going to say, okay, the payment's $3,020. Where in the heck, how does that figure out? It's going to give you a bunch of details, but down through here, you have to make sure this data is all accurate. So the loan piece right through here, it's giving you a $350,000 loan minus the $10,500 down at a 6% rate at a 30-year term. So the principal and interest piece of this would be right through here, $2,213. There's more to the equation when you're buying a house. You have to also put in what your costs would be for insurance, taxes. You might have an association fee. You might have PMI. There's other factors that are going to get involved. Okay, so what you need to do with this, let's dissect this. Okay, so let's just keep these numbers for now. Or if you know what your insurance is going to be, you're like, Dan, my insurance is $1,800 a month or $1,800 a year, and my real estate taxes are $3,550. Okay, you can override that system right there, and then it'll give you an accurate read right through here. It's also giving you, if I move my head around, if I can do that, I can't do that here, but it's also giving you behind my scene, it's calculating what your PMI payment would be as well. So this is your total payment. Okay, so this is what your mortgage payment would be. All right, now we have to figure out what program would you fit into. Okay, so what we do, we're trying to figure out, it's going to be dependent on your credit score, If you have a credit score probably in the mid to low 600s, you're probably going to go with an FHA loan. If you have credit scores in the 700s, maybe 740, 50, 60, you're probably going to go with a conventional loan. Okay, so let's look at the criteria that's based on your debt ratio when it comes to these different mortgage programs. Okay, so it says right here, a conventional loan, you have a front end and a back end. Okay, with the front end, we call the front end ratio. There's a front end and a back end. The front end ratio is basically just your mortgage payment divided by your gross monthly income. So take the income you earned last year. You can even take your W-2 if you've been on the job for several years, just divide it by 12 and then take that payment and divide it by your income. That'll give you your front end ratio. Okay, so that's that piece of it. So now we know the front end ratio. Now we got to figure out the back end ratio. Okay, so what I just added to the YouTube channel down below, if you don't know what your credit looks like or your credit scores or whatever, there's a free system down there. You might have it now, but you might not. Check it out. What you have to do to figure out what your back end ratio is what other debt do you have? Okay, do you have a car loan? Do you have a credit card payments? Do you have student loan payments? Student loan payments are the one thing I'm going to talk about right now. Even if you don't have a student loan payment, because we get a lot of people saying, Dan, my payment's deferred. When you're looking for a mortgage, we still have to basically hit you for what a student loan payment would be, because eventually those payments are going to start coming due. Okay, so in most cases with a conventional loan, we're going to take that balance that you have on your student loans, and we're going to take 1% of that, and we're going to add it to your monthly debt. Okay, if you're looking at a government loan like FHA, VA, or USDA, you're going to take 0.5% of that balance and add, take 0.5, multiply it by how much student loan debt you have, and that would equate out to what the payment would be. Well, what we're going to use is that when we're trying to qualify you for a mortgage. Okay, so that's what you take. And then you take all your other credit cards, car loans, anything else, and you add that to your proposed mortgage payment. Okay, and then you divide it by your gross monthly income. That'll give you your overall or your back end debt ratio. And then it's going to fill in right through here. So on a conventional loan, you can go up to 50% maximum with your debt ratio. Actually, you can go to 49.9. As soon as you go over that, it's going to get deferred or it's going to basically decline your loan. On an FHA loan, I call these out when they're wrong. This is wrong, but I couldn't get it to fix it. You can go up to the front end ratio that they want as your housing payment is usually 43, right about there, 43, 44. You can go on your back end ratio. I've seen it up to 57%. Now, I'm not saying that's the way to do it, but I'm just saying that's the guidelines. Okay. VA is it's completely different as well. VA is at 41%. And then the back end ratio is, I've seen them approved up to like 60%, the back end debt ratios. So if you're a VA client, that's the way to go, because it's really loose on guidelines and the rates are fantastic. Okay. A lot of people do call in and request, can they get a USDA loan? They're probably one of the hardest things to qualify for. Okay. You have to be in a specific zone of that home. Your income cannot exceed a certain level. Like if you're making 200 grand, you're probably most likely not going to qualify for a USDA loan. So their ratios are 41/44. Very rarely do we see anybody with these ratios, believe it or not. Okay. So that's basically the differences in the guidelines when it comes to, mortgage programs. Okay, you have to figure out what debt ratio you fit into. But let's go back. Here's the programs. LA, 1.2 million. They make $79,000. I'll say would be impossible to buy a house in LA if you're only making 80 grand. Let's go over to the mortgage calculator and let's work on this. Okay, so let's say it's 1.2 million. 1.2 million. Let's say property price is 1.2 million. We're going to put, you're probably not, well, in some parts of LA, it'll be a high cost district. So you put 3% down. Let's say the rate's 6.8%. Your payment's 10 grand. Well, let's go over here and do the advanced chart. Well, maybe the taxes aren't that. Let's say the taxes are only $9,000. And the homeowner's insurance probably aren't going to be that. Let's say the homeowner's insurance is $2,200. Okay, but still, the payment is $9,500. What does the average person in LA make? $79,000. They can't do it. So these are, when people push out these videos and saying, well, you can't afford this or that, folks, most people can't afford a house in LA. So if you guys want me to go through some scenarios with you, if you got any questions, I would love to answer those for you because I want to break down, what you look at on a daily basis. So I post interest rates every day and give you a feel for what's going on with those. But a lot of times people just don't know how to really, what is my final payment? So a lot of times when we get people pre-approved, we'll say, call us when you go out and look at homes so we can run the numbers and help you out. Well, I can actually help you out to do that on your own right here, right now, today. Okay, so let's break this down. So we're going to go over the rates. So let's say, for example, if I'm looking at a conventional rate, I always use 7% in this scenario right through here. Why? Well, because if I miss something, I missed your homeowner's insurance off a little bit or your taxes off, I'd rather come back to you with a high quote and say, hey, your mortgage payment's going to be, $3,000. And then you're like, okay, I can afford that. And then later, maybe a couple weeks later, when we get all the paperwork together, I come back and say, hey, your mortgage payment's going to be $2,700. You'd probably be pretty happy with me. However, if I flipped it around, I'm like, hey, your mortgage payment's going to be $2,700. And then a month later, I come back and say, oh, it's going to be $3,000. You'd be like, dude, what happened? I get it. So I want to be as accurate as I can. That's why I want to show you guys all the information here so you can do your own research and then reach out to us when you need that help. Okay, so let's go over to this. When you're looking at a home, so here's a home in Chicago. I don't know who this is, and I apologize. Well, they might get some hits today, but here's a home that, say somebody's looking at. Here's what I need you to look at. Not only the price, look at this. That one, I just noticed that. Price increase $50,000 on March 17th. Whatever. So let's say it's $200,000 is the purchase price. What you need to pay attention to majorly are these things right through here, these advanced charts. What is your homeowner's insurance going to be? What is your taxes going to be? Well, it's kind of easy to figure out the taxes to a point. You're going to go over to the listing, or you're going to ask your realtor, and you're going to scroll all the way down basically to the bottom to this section. It might not show it in here. Here we go. The taxes. It's going to show you taxes. You're going to find this somewhere. So in this one, this is $3,821 back in 2022. Well, that might not do me any good. You might even be able to go to the county website. But these are the things I do in the background. Well, it's Cook County, so go figure. But this is maybe why it's not updated. It's Cook County, Illinois. So we'll give that kudos for the chart. But that's what you need to pay attention to. The next thing is with insurances. People are just dumbfounded today when insurance comes. When I used to work on getting people pre-approved, I would use $120, maybe $150 a month for their homeowner's insurance quote. Now it's not unrealistic to get $200, $300, maybe $400 on your homeowner's insurance. So the biggest thing I can ask you to do before you really start falling in love with that house, make sure we fill in all the gaps here. We want to know what the real estate taxes are and what the homeowner's insurance is. So if you don't know the homeowner's insurance, just call your agent and give him your information. He already has it. And say, if I bought a house, $300,000 in this neighborhood, just give him maybe a particular address. They can come back to you and say, okay, here's probably most likely what your insurance is going to look like. Okay. So please do that because that could add in hundreds of dollars extra on your payment. Same thing with the taxes. When you're looking at the taxes, this one seems pretty, well, not that accurate because Cook County taxes have gone up dramatically over the last 12 months. But, you can usually take this number, but if it really looks off, for example, let's go, if you're looking at homes and one's, $5,000, one's $6,000, one's, $4,800, and then you get one that's like $1,200, there's probably a reason for it. One, they might be a veteran, that they're exempt from paying, substantial real estate taxes. They might be a senior with a senior freeze. So those might be different areas so don't take this data, basically etched in stone. You have to understand what the taxes are and really know what they are. So again, if they seem like they're out of whack, reach out to me. If I'm working with you on the pre-approval, I'll call the county and ask them, is this accurate? Is this an exemption? What is it? Because you really need to drill down on what that payment is, because that's what we're trying to figure out here. How much can you afford if you're looking to buy that first house? So if you have any questions, there's quite a bit of people on here. If you have any questions that you want me to run through, or you have a scenario you want me to run through, please ask it. Love to do that with you live here. If not, if you want to reach me after the video, please reach me at Dan at therateupdate.com, and you can find all my information right through here. Go to therateupdate.com, and here's all our information. But that's what we wanted to talk about today. So let's run some scenarios. I'll just say, some of the recent ones I got recently. Let's say, for example, here, we'll go back to here, the home affordability. Well, let's go in through and let's use some of these right through here to see what these people, if they make this income, what they would qualify for. So let's get over to it. So if I'm making, let's say $80,000. So what does $80,000 equate out to in a year? So let me break that down. I got to do it on my phone. I'm not the best math person here. So let's figure this out. 80,000 divided by 12 equals, so we got 60. I don't like that number. We'll just go $6,700 in your monthly income. Okay. So let's go back over to here. We know that we can go to, let's say I'm going to be tight on my ratio. So I'm going to go with an FHA loan. So in this case, I need to keep my payment, my basically my front end ratio about 43. Okay. This is skewed. There's no 31, 40, whatever. It's basically 43, 57. All right. That's what the numbers are here. So let's go over to our nifty calculator and say, okay, if we're making 66 a month, our payments cannot exceed, say, $3,200. So now we got to go back to the drawing board and say, okay, what can we get for $3,200? So let's go backwards a little bit. We'll go in $250,000 and hit that in. We're putting down three. No, we're pretty close there, but let's go to the advanced features, because these probably aren't going to be accurate. Yeah, they are accurate. Actually adjusted with the percentages right through here. This is some AI that we have built out in the background. So it's going to be a $1,987 payment. Might fit. Okay, so this is how you do that. If it doesn't fit or does fit, just say, okay, I can go up a little bit more, maybe $255. Okay, so that's that. So you got $2,200. So let's say we could have gone to $2,100 just for these purposes. Well, now we need to know what other debt you have. And a lot of people don't realize, again, student loan debt, even if it's deferred, you count it. If you have a lease on your car, even though it has less than 10 payments remaining, you still have to count it. If you have a car loan specifically and you only have 10 payments left, you do not have to count it because you're paying it off. On the lease part, what they assume is we're going to trade in the lease, and then you're going to have to get another lease. So we're going to have to hit you with another car payment. So please use one of the systems out there. And again, I have a free system right down below. It says free credit scores. Click it. Just take all the data from there. Make sure it's accurate. And then the next thing I need you to do is go through each one of those and fill in the blanks. So what you're going to do is say, okay, I have a car payment at, $350. I have a Visa payment of $180. Well, maybe I can pay that off. Okay. So that's what we need to do. And then add it to this equation. And then we're going to divide it by your monthly gross income. And then we're going to compare it to which chart over there that it fits. Okay, so that's basically how you do it. If we drill down into some different areas into here where you could see, let's say, for example, the homeowners insurance. And again, the taxes. Taxes in Illinois are probably, I think they're the second or third highest in the whole country behind New Jersey. So I'm going to say, okay, our tax rate here, let's say it's 1.5. You can see how big of a difference it made. Okay, so this is where you really have to know these numbers. Not only what your loan amount was going to be, what are your taxes and insurance? It's a huge piece of this puzzle, because again, I used to use on my insurance policies, I would use $100 a month. Okay, well, this one's coming in at $400 a month. It won't be that, but let's just say it's $200 a month. And their taxes are probably going to be equated out to about $3,800. So in this case, this payment would be actually $2,166, not $19. That's $200 difference. You see where I'm going with this? So those little pieces of the puzzle, a lot of times, is also when we get back with you guys and you'll say, okay, why did my payment change? And why did I need more money down or bringing to the closing? It's all these numbers play a big role in all of this. So if you guys have any questions, please shoot them out there. We have a decent crowd out there today. So that's what I want you to look at through there. So let's get over to here. What did we watch through here? The histories on that. We go over to, I also wanted to show you, there was an article out today right here, 5 states where home prices are falling fast. Okay, again, here, these are starting to flow again. Oh, it didn't. Well, it was a news article by Homebuyer, and I love posting their articles because a lot of times they're right on point. And it was right on point. It basically gave a map, and it showed the whole country where prices were going up and where prices were going down. So, okay, so let's get over to some questions. What do we got here? First off, it's make $115 a year, have one rental, rented out for $3,100 a month for the house is $1,500. Want to rent credit for my payment is $3,200. I'm going to buy my third house, debt $600 a month. You are you should be sitting in my shoes. So again, this person has multiple properties, cash flow. They're looking to buy a third house. And if you need some assistance with buying that third house, I would love to assist you with this. You get how the payments work and how rentals work as well. I'd love to talk to you at some point about how the rentals are working out for you. But that's what we're seeing so far today in the data that I wanted to present. Let's go down to any footnotes here. I just want to see if there's anything that I missed. But if you guys, again, if you have any questions, I would love to help you. I don't know, were you wanting me to run a scenario for you possibly? Let's see, that make is 115. So you make about $9,000 a month. I have one rental rented out at $3,100. My payment, house is $1,500. I want to rent my current house $4,500. My payments, you should have no problem. You have considerable cash flow. I mean, you've doubled it there. And you got another $1,500 or $1,300 in cash flow there. So you're in a great position. $600 a month in other debts. You basically don't have a back end debt ratio. It'd be a full front end ratio. And this income would actually add to your income. So you'd be looking at about $11,000 a month in income with $600 a month in debt. I think you're in a fantastic position, but I hope you understand how to work these numbers in the background. I don't know where you live. If you're in an area that's, like Los Angeles at $1.2 million, I couldn't even afford a house in Los Angeles, folks. So if you go to New York, some of the areas that you have to focus in on, you really have to focus in on, especially in, for example, if you're in Florida, the tax or the insurance. Please, the first thing you do before you even start kicking the tires, if you want to buy a house, call and see what the insurance is going to be. I have a young lady we're working on right now. Her insurance is $9,000 a year. $9,000 a year on insurance. So that makes it think if you went over to this mortgage calculator and said, okay, here's the payment. But then you went to the advanced features and said, oh, my insurance is $9,000. Watch how that's $2,100. Okay. Just see what I mean. Okay. So you have to really understand how all the numbers work in this scenario. Let's see what else we got for today. Well, another thing I want to talk to you guys about is this. Opt-out pre-screener. So don't go away. Don't turn the dial, and we're going to stay here for a little bit. Before you go out and you put in your application for me, or even if I know this is off the cuff a little bit, even if you're looking for a car, okay, here's what a lot of people are saying, Dan, I didn't do this. I thought, you created this, or I thought I had to pay for it, or it's a scam or whatever. Folks, you have to do this, okay? What this site does for you, before you go in and apply for a mortgage or a car loan, what I need you to do is go to optoutprescreener.com. Here's what happens. And I had a young man, I don't know if he's on here. Christian, if you're on here today, I'd love you to pop up. But here's what happens. When I pull your credit, not just me, any bank pulls your credit because you're looking for a mortgage or you're looking for a car loan. What happens is the credit agencies at that point have the ability to sell your data. Okay. And they're doing it. I had one there's two examples, and I'm trying to get these people on my YouTube video so they can actually validate it for me. One young man, he received, the last time he let me know with an update, he received 54 solicitations. I had a young lady who did this, and as of last Thursday, she's received 0 so far. So what this does is, before you put in that application, do this 5 days prior to. That's how long it'll take to sync. What will happen is it'll stop those leads from being sold. Okay, they're selling your credit scores, all your financial data, and everything else. If you want that to be done, and you want hassled with solicitors, go ahead and just wait. But if you don't want hassle, go to optoutprescreener.com. I think you'll thank me for that one. But that's it for today, unless you guys have more questions. But the whole purpose was just trying to explain to you guys, how much can you afford? I don't want to come out there and say, okay, here's the rule of thumb. What are you comfortable paying? That's the first and foremost. Then go in and start working with the mortgage calculator. Go into, I'll go to the bottom of our website right now on YouTube and just show you some of the captions. I want to make sure the description in my captions below. Well, I won't do that here. My apologies, folks. I just don't want to show you a bunch of data in the background. But hopefully that helps you. But if I could be of any help to you, please go to the rateupdate.com. Our slogan here is this, and I'll explain to you what we do. I have a slogan. It's one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, what do I mean by that? Doesn't every bank have the ability to do all that? Well, no. Okay, so what you're looking to do, and every person that calls, they're like, what's your rate? And there's a lot more to that equation than just the rate. But let me explain to you how we work and how this all works with the one application thing. I work at a federal bank, and it's a fantastic federal bank. I hope to retire here. And the cool thing about it is we've set up, and they're allowing me to help with this process. Right now, we have about 33 different lenders, as well as our bank. We're a federal bank plus 33 other lenders. I have all these products to work with. And the reason why we did it is because some might have better rates than us. One has a $6,000 grant that I might be able to offer you to check in, go to the rate update, see if you qualify. If you didn't qualify for that, maybe you qualify for a $4,500 grant. And then also mortgage rates, there's spreads between each company. So many times I'll just go in here and you'll be amazed at the differentials between, one lender and the other. It's the same criteria, the same credit score and everything, but the rate one might be 6.875 today, and another lender might be 7.125. Let me do all the heavy lifting for you. I'd love to do that. There's no fee for what I do. It's basically I'm a lender, and if we can't lend it through our bank, we can broker it, and we make the money the same way as either way. So I hope you understand that part of it. But let's get over to some more questions that we got and see what we have. Does it make sense to refinance an investment property currently at 7.125 with a 30-year fixed? I'm planning to go to a 15-year. Principal is, if you're looking to go backwards, for example, 7.125, there's going to be a couple different answers to this. You got a 7.125, which is higher than market rates, but it's an investment property. Okay. The 30-year rate would be basically the highest rate that you would get. So if you would just reach out to me, just shoot me an email or text me, or, you can even go to the rateupdate.com and put in your application. Folks, I'm not going to run your credit if you put in the application. I think a lot of people are leery of that because a lot of people start their applications and just stop. So you have it, my word, that I won't run your credit. I'll get a hold of you after you put in your application, and I'll call you, and I'll just go through any questions that you have. And if you're comfortable that. But in your case, a 15-year term, I hate this spread. The spread's not very big, but let's say to drop it by 1%. 158,000 isn't really going to make that much of a difference. Let's go over to here just so I can show it to you. So if we go to, let's just go back to a refinance calculator, because I have those on my my website as well. Let's go to refinance. Whoa, where'd it go? Calculators, and refinance calculator. So let's go over to this. You know what I'm going to show you guys? Let's go to one other thing. I have a better calculator. We'll use this one for now. Conventional loan. You got a 30-year term. I'm going to say $158,000. It's 7.125. I'm just going to keep everything the same for right now. So your payment would be $1,429. Okay, if we did that on a 15-year, let's see, $1,429. I'm going to go to the advanced features, and you're going to want to wipe these out because I just want to look at what your principal and interest payments would be. So this is kind of how I work it behind the scenes. So in this case, I would be doing, okay, your payment is $1,064 now. And I know it's not that because you took out a while back. But if we went to a 30 or 15-year, that's what I would do. So I wouldn't do it that way. So I would look at, and what we do here behind the scenes is before I get back with you, I'll look and see how much it's going to cost you for the refinance. And we break everything down accordingly. So hopefully that helps you out a little bit more. Let's keep going. Appraised value through currently 149, no escrow, rent is 22. Awesome. If you wouldn't mind, And Shul, if you would want to reach out to me after this video, I'd love to chat with you and see if on a one-on-one, is there something there that we can help? Are you saving some money and does it make sense? So reach out to me as soon as the show's over, if you would, or shoot me an email at dan@therateupdate.com. Be more than happy to break that down for you, buddy. Thanks again for sharing all your knowledge. You betcha. And is there anything else down here? Let's see. Cody, make $127,942 gross. My man, you're right on the button. Only debt is 2 car loans and 924 VA loan. Taxes, HOA currently floating at 5.625. If I'm missing anything else, let me know. So if you currently floating, so you've been approved. So in this case, Cody makes $10,000 a month. And let's go through that. So let's go to Cody's loan. He's going to get a 30-year VA loan, and VA are fantastic. Here's why. Cody's going to get, I don't know what your loan amount, but let's just say Cody's buying a $400,000 home. Here's the cool thing about this. There's no mortgage insurance. Okay. Let's say if this was a conventional loan, watch the mortgage insurance over here. This is why I tell people all the time is you have to know, where did it go? Let me see. Oh, I zeroed out everything. Let me refresh this. Hold on a second. And I'm going to go back because we're going to go back to a purchase loan mortgage calculator. So this is right on my website. So you'll see right through here. See where it says conventional, and it's going to give you a mortgage insurance. And you can't see that right through there. See the mortgage insurance right above my head? Okay, so now all I'm going to do is at the top here, I'm going to change. Let me shrink this so you guys can see the whole screen for while I'm doing this. If we go to a VA loan, at 212 drops right off. That's why use a VA loan. And I had videos coming out for VA people to refinance. If you're a VA loan holder, please reach out to us. We'd love to help. So in this case, Cody, 5.62, you're probably getting a 5.625. I'd love to give you a quote on that because VA rates right now are fantastic. Where are they? Right through here, 6.25. I actually just quoted earlier today. I think it was in the high fives, but I don't know your credit score or any of that situation. So again, if you would reach out to me after this, love to help you in any way I can. Next question that we got is cash on hand, $40,000, no disability from VA, pre-approved for $384,000 with some change. Love it, love it, love it. If I can be of any help to you guys, if you're watching this and you reached out, I would love to give you at least an offer. So if you're watching this and getting some education, try using my services because again, here's I'll recap on what I do. And the intriguing thing is why a lot of people are reaching out to us right at this point is we offer a service that I don't know of anybody else that offers you. I'm licensed in all 50 states as well as Puerto Rico. Here's the trick behind it all. I'm set up with 33 lenders, and I'm one of the lenders. Okay, so you putting in your application with me is actually going to make it that you're going to get quotes from 33 different lenders. So that's what our pride is, and that's what we pride ourselves on. Being one of the best in the market, and not only with what we do and how we do it and our knowledge, but with rates, fees, and programs. So that is my report for today. If nobody else has any questions, I hope you learned something today in today's video, and it's how to calculate, what your mortgage payment would be. How much can you really afford? I don't like coming out there and saying, oh, you can't afford that or what. I want to put the tools in your hands that you can figure this out on your own before you really go out there and start looking for that dream home. So if I can be of any help to you guys, please, first off, go to optoutprescreener.com, fill this out. You'll thank me in the long run. But if you're looking for a loan to buy that first house, maybe buy that first investment property, or maybe you're looking to refinance with the rates the way they are today, I'd love to help. So just go to therateupdate.com. You're going to find all my information right through here. If you want to reach me by email or call, please do so. Just scroll down to the bottom of the website. There's all my information right down through there. So if you've been on this website or this cast and you like some of the data and you just want me to run some numbers for you, please give me a call or shoot me an email. That's it for today, folks. It was shorter than usual, but I appreciate you guys being here, and I hope you learned something. So I'll be back at the closing bell today. Let you guys know how everything ended for the day, but looks like right now mortgage rates are flat as a pancake, and I'll take it. So other than that, have a fantastic day, folks. Can't wait to see you here at the closing bell, and I'll be back again tomorrow. Show you how all this mess